excited to have with us today Nathan Long, the president of Quest Trust, here to talk about sticky situations when doing IRA investments and how to solve them. So before we get started with today's main presentation, and kind of while we let people get signed on here, I do just have a couple of quick announcements, event updates for you guys that I want to go through here for just a few minutes first. For those of you guys who don't know me, my name is Haley Gant. I am one of our IRA specialists here at Quest. I kind of lead our business development, and I work very hard with our entire marketing team to help put on these events for you guys, keep our education as up to date as possible. And, hopefully as we get back into in-person events later this year, hosting just more and more networking and educational opportunities for all of our attendees out there, both in Texas and throughout the rest of the US as well. So quick little commercial about Quest. Who are we? We are a self-directed IRA custodian based out of Houston, Texas. We have offices in Houston, Austin, and Dallas. Most of our staff is based out of Houston, but we do have clients all across the US. We do operate in all 50 states. And we really pride ourselves on having extremely high quality customer service. Our staff is educated about pretty much all things self-directed IRAs. And we are here to, help link up with you and make this a smooth and easy process on you as you are learning how to diversify your retirement account, invest your IRA into non-traditional assets. Quest is here to help throughout every step of the process. And we're a pretty good sized company. We have about $2 billion in assets under management. And all of that $2 billion is privately held assets that our clients actually self-direct and hold in their retirement accounts with us here at Quest. So we don't hold stocks, we don't hold mutual funds or anything publicly traded like that. But at Quest, we really specialize in teaching our clients how to use their IRAs to invest into real estate investment properties, promissory notes, private lending. A lot of our clients like to use their IRAs to passively invest into multifamily syndications, privately held companies. You name it, there's probably a good chance you can hold title to that asset in your IRA account. And again, we are just here to help throughout every step of the process. Now, super important here, and I have a feeling you're actually going to see this disclaimer twice in the beginning of this presentation. So just in case you guys forget in between now and the next 10 minutes, Quest does not give tax, legal, or investment advice. This presentation, as well as every other presentation that we give at Quest, is strictly for educational purposes only. Today we have Nathan with us, but we do bring in a lot of different guest speakers. That is really to provide you guys with the best education as we possibly can. But please always do your own due diligence before entering into investments, whether it's with your IRA or with non-IRA funds. You want to make sure that you are vetting the people that you are working with, you're vetting the deals, you're doing your own due diligence, and hopefully Quest can help to provide some good resources and help to point you in the right direction. But please be sure to use professionals, CPAs, accountants, attorneys, whoever you need to help make sure that your deals are structured properly. We really just cannot stress that enough. Now, normally in these little intro slides, I kind of go through what is a self-directed IRA? What types of investments can you hold at Quest? But I do think Nathan is actually going to cover that just a little bit in the beginning of his presentation. So I really want to spend my few minutes here to focus on some upcoming deadlines and some upcoming events that we have at Quest as well. As you can see here on the screen, we have the contribution limits for both 2020 and the 2021 tax year. Now, in case you are not aware, you can actually still max out those 2020 contributions up until the tax filing deadline, which is April 15th for most of the country. If you are in Texas and you've been affected by the recent winter storm that we've had, they have actually extended the tax filing deadline for people in Texas that fit those criteria to June 15th. But again, that is only for people that are in Texas. For everyone else in the US, be sure to get those IRAs open and get those contributions in before the tax filing deadline, before April 15th. We do have some promotions going on here right now at Quest. We know this is a really busy time for everyone trying to get these things in before the deadline. So my piece of advice to you guys would be to don't wait. Go ahead and get the ball rolling. If you are looking to max out these contributions before the tax filing deadline, go ahead and reach out to us, get the process started, because the closer and closer we get to April 15th, the busier and busier our phone lines get. So helps everyone out, helps you cross that off your list before you wait until the day before it's due to do it. But I'll have our contact information here at the end of these slides so you guys can get that process started if you are looking to. Now, if you've watched our classes, you know that we provide a ton of education. Almost all of it is almost always free. This webinar, as well as every other webinar that we host at Quest, is available to rewatch on our YouTube channel. We do actually have Katie, one of our other IRA specialists, online moderating today's webinar. You guys will see her here in the Zoom chat sending some links. Be sure to check those out. Check them out now, check them out after the presentation. We have a lot of great resources for you guys. And again, our goal is to help educate you and help to be the best resource that we can be as you guys are, truly taking control of your retirement account investments. So just to touch on a few of the different resources that we have, I've already mentioned our YouTube channel. We have a lot of great videos there, both all of our pre-recorded classes and a lot of pre-recorded shorter videos there as well. We have articles, blogs on our website. You can actually chat live with an IRA specialist right now through our website at any time during our business hours here at Quest. We also host these webinars during the week. We host them in the evenings, and we've got a really popular Self-Directed IRA Saturday series that we host. Every Saturday at 12 p.m. Central Time, we bring in a pretty big guest speaker. We get anywhere from 300 to 400 people register for these webinars on the weekends. So they are very popular. It's some pretty high level education that we offer on those Saturday webinars. So be sure to check them out if you haven't already. And if you're out in this beautiful spring weather, enjoying the weekend, tune into our YouTube channel. You can rewatch any of those classes at any time. Now, my personal favorite event, or one of my personal favorite events that we have coming up, is our virtual networking happy hour that we host on the first and third Wednesday of every single month. It's online through Zoom, but it's actually set up as a Zoom meeting. So everyone that's attending gets a chance to share their cameras. Everyone gets a chance to introduce themselves to the group. And this event has been really awesome to help investors start new conversations with each other. A lot of people have been able to build connections with other investors from all across the US at these virtual happy hours. And we get anywhere from about 50 to 70 investors from across the US that join us. And in this quick hour-and-a-half time frame, I don't think there's anywhere else where you can meet that many investors from across the country. And it's been attracting a lot of really high quality people as well. So if you're new, if you're looking for deals, if you're looking for somewhere to place your money, come to our happy hours. They're a lot of fun, and you can network with people from all across the US. Now, our biggest event that we have coming up here in the spring, coming up pretty quickly on April 16th and 17th, it's a Friday, Saturday. This is QuestCon Live. It is a 2-day online self-directed IRA conference. And this is actually the third edition of QuestCon that we've hosted since the beginning of 2020, since all of the events have, pretty much moved online. Tickets are in pre-sales right now. They are $50 to attend for the full weekend. You will also get access to an exclusive virtual happy hour just for the QuestCon ticket holders the night before the event, so that Thursday evening before. But join us for QuestCon. We'll have about 20 different guest speakers. Tickets do go up in price next Monday, a week from yesterday. And be sure to keep out an eye for our newsletters coming up in this week. We have just finalized our agenda, and we will be revealing that agenda throughout the end of this week. So be sure to keep an eye on those. Katie is sending those links to the chat now. And, we get a lot of our business from word of mouth. There's a lot of people out there that do what we do, or, there's a few companies out there, but you'll find that as you talk to other investors, Quest has a really good reputation for taking care of our clients, getting things done quickly, and providing really high-level education to our clients throughout the entire step of the process, so you guys can also understand what's going on as you're moving into this world of self-directing your IRA. Now, in the beginning of this year, we did actually revamp our referral program, and it's really taking off. So we have actually decided to double our referral rewards for the entire month of March. So I know we get a lot of current clients that are watching these webinars. So first of all, thank you guys for supporting us and watching these classes, but be sure to share this information with your friends and other people in your network. Throughout the end of March, if you refer someone over to Quest and they open up an account, you will each get a $50 credit on any of your Quest fees. So there's no limit to the amount of people that you can refer to Quest. You do just have to do a couple of things here to make sure that you guys both receive your credits. Make sure whoever you refer to Quest uses the promo code double rewards on their application, and make sure that they put your name on there as well so we know who referred them. If you have questions about this, reach out to an IRA specialist. We're more than happy to help. Send some of this information to you. We can send you an email with steps of how to get started that you can send out to other people in your network and start collecting those free credits through the end of this month. Now, if you have questions, we are very easy to get a hold of. You can chat live with an IRA specialist at any time during our business hours through our website. You can give us a call or you can send us an email. And of course, in today's world of nothing being printed out, everything is a QR code. I have this QR code right here. If you want to schedule a consultation with an IRA specialist, just whip out your phone, scan this QR code really quick. It takes about 15 seconds to sign up for a free consultation, and we'll give you a call sometime before the end of the day today. Set up a time to chat, or we can talk with you today if you have time to dedicate to that consultation. But I always like to tell people, no matter what step of the process you might be in, whether this is your first class or whether you've been investing for a long time, there is always a way that Quest can help in some form or way. It's always free to talk to us. Our IRA specialist go through some pretty vigorous training internally to help make sure that we can provide the best education as possible. So take advantage of it. Tell your friends about it. Join us for our events. And, we appreciate all of you guys out there that support us. And we're happy to be here providing this education. So that's about all that I have for my quick announcements today, which actually took a little bit longer than normal. I get really excited about our events if you guys can't see, but I'm going to go ahead and pass the torch off to Nathan. Nathan, super excited to have you here today talking about sticky situations and how to solve them. If you guys have questions, send them to the Q&A box and we'll be answering them at the end of the presentation.
Nice job. They can also ask questions as they go along in the Q&A, and Katie will either answer them and kind of go as they went. I'm not talking about all sticky situations today, Taylor. I'm just talking about the sticky situations involved in directly owning real estate in your IRA. And I think that that's going to be really helpful because there are, to pretend like there is no problems having real estate in your IRA is not very fair. There certainly is problems. It is more difficult to own real estate in your IRA than other type of things. So we'll look at some of those problems. So what I like to do is look at the problem and then look at possible solutions to that problem, or see what people have done. And I find that's often helpful. Just like Haley already did a great disclaimer, we don't give tax, legal, investment advice or endorsing products. We don't sell anything here at Quest. So every time you talk to an IRA specialist, it's always a neutral conversation. They're not trying to sell you anything or get you involved in any type of investment or anything else. And that's nice. It's nice to be able to talk to somebody that without the pressure of those things. We just find that if we can educate you and do a good job of that, we'll earn your business eventually, because you'll understand how to use it. So do the due diligence, as she said. Real basic. I'm going to go really fast through some of this stuff. There's plenty of information out there, and most of you, I can tell by looking at the list, have probably been exposed to some of this. But a self-directed IRA is not really a type of IRA. We have all different types of self-directed IRAs. It's just a marketing term. We just hold private assets and we're not licensed securities agents, so we don't sell investments. Whereas other companies you may be familiar with, maybe Charles Schwab or Fidelity or Edward Jones, some of these they're licensed securities agents, and their job is to sell you publicly traded things. Most of my clients have an account in both places. They have an account in some place that they're traditional custodian, where they do the normal stuff. They have an account with Quest. They do the weird stuff, and we transfer the money back and forth as needed. There's a lot of benefits to having a self-directed IRA. One of them is it allows it to what I call true diversification. I think it's really hard to be truly diversified without having some of your portfolio surrounded by assets, supported by real estate, and that's hard to do and inside the public sector. But also learning tax saving, learn to take the skills and the things and rather than to always make it and pay tax on it, learn how to make some of that money without paying tax on it for both your future, your family's future, and other types of things. But one of the things that people often don't think about are the social impacts of self-directing. I do all types of self-direction. Often I'm a lender to maybe hard money type of lender. When I loan money, someone's taking up life in our community. They're fixing it up. They're creating jobs in my local community. All while they're paying me above average interest secured by real estate, I might add. But the whole point is often you're locally investing. You're very intimate with what your investment is. Whereas if you're just buying a mutual fund, you might be shotgunning over a whole bunch of different types of investments. And some of those might not be in line with your ethical or political intentions. So I think there is some social aspects of it. But I think one of the largest benefits is it allows you to invest in things that you know and understand. And if you know about buying real estate, that's what you should be investing in your IRA as well, or your retirement plan. Again, if a self-directed IRA isn't a type of IRA, well, what types of IRAs can be self-directed? Well, there's all different types. Everyone hears a lot about the Roth IRA. It's a lot of fun. Roth IRAs, I think, are an important factor. Matter of fact, in today's time, I think that it is one of the cornerstones of building wealth, like owning a home or having a 401k. I think that having a Roth IRA is part of those. But most of the transactions that occur at Quest actually happen now the traditional IRA. And the reason is the traditional IRA is where you're the rollovers from your 401ks, 403bs, all these qualified funds that come out of the employer plans end up in a traditional IRA or tax deferred. And either can be self-directed. I like to pay my taxes now instead of paying them after they grow into a big amount. But it sometimes gets confused that you have to convert in order to do self-direction. That's not true. Great class there on the bottom, how to analyze Roth conversions helps too. We also have employer plans. I'm going to be talking a little bit about employer plans during this thing, specifically the solo 401k and a specific exemption. But these are good for people who are self-employed or have small businesses. We can self-employ those. But probably one of my favorite things to talk about, if you ever get a chance to hear me talk about health savings accounts or Coverdell education accounts, these specialty plans and self-directing or, buying a real estate with your health savings account. I know it blows people away, but it's probably one of the best and most profitable ways to use self-directed accounts is an understanding of health savings accounts and how they work. Catch that class. That's a really good one. All those. But what's important about those is we can also partner those together. In other words, we can invest individually, but one of the big things that I like to do is partner funds together. In other words, when I do a loan to someone or buy a piece of real estate, it might have my IRA primarily, but it might also have my son's IRA, maybe some nieces and nephews, Coverdell education accounts, some money from my health savings account, some money from my wife's Roth IRA. We partner it all together. And this is really easy to do with Quest systems because as the money comes in, it'll just divide up according to who owns it, right? And so your renters or your lenders or whoever's making those payments don't have to worry about all the different types of accounts. The vesting gets a little bit long, but outside of that, it's not any trouble at all to partner these accounts together. What can you invest in a self-directed IRA? I think Haley alluded to that, just about anything that you can take title to. At Quest, we like to break it up into 3 different categories. The direct purchase of real estate, which I'll be talking a lot about today, right? This is when my IRA goes buys a rental property or something else. Promissory notes. This is when we're lending. Often loans are secured by real estate. If it's Texas, it's a note, deed of trust. The other states, it might be a mortgage, But we do that. And then we have department we call it private entities. Private entities is because sometimes we're not directly buying a real estate or directly buying a note. We're buying into an LLC or a limited partnership or joint venture that's doing a commercial building or something bigger and something like that. And the reason why we break it up into the different departments is we find that it's better for servicing you, right? It's easier for me to have private entity specialists, note specialists, real estate specialists, and that keeps your transactions moving in a very fast way by breaking it up like that. Here we go, problems and solutions. This is the meat of my thing. I just like to list a thing and talk about it a little bit. First one is that I always get asked about is, do I need an LLC or a trust or something like that when I buy real estate? Well, if I'm buying real estate outside the IRA, my God, I would always get an LLC. Well, why? Because you got asset protection. In other words, it keeps you from being sued if someone fell down on the property or something else and something occurred anytime, especially if you're doing like flips or something like that, where there's a lot of construction and things going on. Man, you really want to use an LLC. Do you need one when you're doing it with an IRA? Well, not specifically for that purpose, because IRAs already come with a house or a set of protection by themselves. In other words, just like an LLC isolates that lawsuit, an IRA is isolated as well. In other words, you could sue the IRA, but you can't sue the other accounts that you have or your personal accounts and so forth and so on. So I must not ever need a trust. Well, that's not necessarily true either, right? I think that there's some problems with having an LLC or a trust, and we need to understand what those problems are before we make the decision to do that. But the biggest one comes to what we call disqualified persons. You see, there are people who are disqualified to the IRA. They can't do business with the IRA. They can't buy, sell, trade, or extend services or receive a benefit either directly or indirectly. Well, who are those people? Well, that's you, right? You are disqualified to your IRA. So if you have the idea is because it's your IRA, they want you to use it for your future and not get a benefit right now. Your IRA can buy a house, but you couldn't go live in it. You have to put a renter in there, and it's an investment for your IRA, right? So again, you can't buy, sell, trade, or extend services or receive a benefit. Here's the kicker. Not only are you disqualified, but you, your spouse, your lineal ascendants and descendants, their spouses, and companies that those people own, control, manage, or highly compensated employees thereof. So the problem is as we set up an LLC in an IRA, who would be the managing member? Who would hold the checkbook? And the real question is, who can't? And who can't hold the checkbook and who can't be the managing member is you, is your spouse, is your children, is your parents, or their spouses. I didn't say brothers, sisters, other types of things. So we have a little bit of a loss of control whenever we do set up an LLC inside of an IRA, right? Because you cannot buy, sell, trade, loan, or extend services, being that manager to that LLC is seen as an extension of service, and that can create what we call a prohibited transaction in your IRA with very high fines. So what do we do? How do we get around it? Well, different ways. One way is you set up an LLC. Let's first talk about why you'd want one. I'm going to take a minute and just talk about that for a second. Pause for a second. Well, if you don't need it for asset protection, why would you have an LLC in an IRA? And the easy answer for me is say you never need one. You know why? Because the answer is the IRA custodian, Nathan and Haley, Katie there, we're going to fee you to death. We get paid by fees. So every time you do a transaction, we charge a fee. That's how we make our money. All right. So if you have one house in an IRA, it's not going to make any difference or need it. But I have one client who has like 280 houses in their IRA, right? In that case, if they charge fees all the time, they would just get feed to death. Now, that particular person actually doesn't have an LLC. They love the accounting that Quest does. They just join the gold family plan and then they can have unlimited amounts. But for people, what one of the big advantages is actually the fees and ease of use. So if I'm doing a flip property or construction, I don't have to go back to Quest to get the money each time. I can just, get a checkbook. But the other part is if I own 10 houses, really Quest only has you own one LLC. So you got one asset fee. And I can buy and sell inside that LLC. So that's honestly the main reason why most people would use it. But to just throw a thing and say, oh, I have to have an LLC because such and such said I did, that's not true. For most people, we have one or two assets in the IRA, a couple of rental properties or something like that. You do not need an LLC. Our systems at Quest are very robust for taking payments in and also paying payments out. It's very, very easy to use. You can do it from your phone. You can do it all different types of ways. But if you want an LLC, how do you solve this disqualified person problem? You just put someone else in there. Use somebody else that is not you, spouse, lineals, ascendants, descendants, or their spouses. Who could that be? That could be your brother. That could be an employee. That could be a trusted friend. That could be anybody that is not one of those other that falls into a disqualified person category. If you have a question about it, just jump on and chat with an IRA specialist about it. They're highly versed in this and can talk to you about your unique individual situation. Again, a lot of you just don't need one though. Just don't have it. Just use the systems at Quest, purchase it directly in the IRA. You're going to solve a problem. I know a lot of people going, well, checkbook IRAs have been out there for a long time. Oh, yeah, they have. And Quincy and myself have been saying for a long time, ooh, this is a problem. Well, someone started to agree with us. They started to realize that they could maybe end up getting a much fee. That person was the IRS. What happened is about 2 years ago, they started collecting information, not just from Quest, but from every self-directed company in the country now has to report when there's a single manager LLC inside the IRA. So they're getting a list, checking it twice, checking who's naughty. All right. And I've got very good inside information is what they're looking for are specifically single manager LLCs where the managing member is a disqualified person. So be careful. If you have one, what do? How do you fix it? Do you call the IRS and say, what's going on? No, don't ever do that. Just change your managing member. Just go in and change who the managing member is and you'll probably be just fine. All right. I always have, whenever someone else asks me that, they're like, well, what happens if you don't have like a close friend or somebody like that you could trust to hold that account for you? And I said, oh, you're in the wrong class. You need a friendship class. They have those down at the public library. They're free. That was a joke. Thought I'd throw that in. Anyway, again, go ahead and form an LLC, a trust, a C corporation, or a joint venture. Just make the managing member non-disqualified. And this is one of the reasons why you see trust used a lot inside of IRAs. Why? Well, I don't like trust outside the IRAs, and I'd say a lot of attorneys wouldn't. I'm not an attorney, but a lot of attorneys would agree with me. And the reason is because a trust is not really an entity. It's a pass-through document. We're just trusting a duty to somebody else. So with a trust inside an IRA, it's inexpensive to set up typically, very easy to dissolve, but it just passes all that it doesn't have any asset protection or tax protection or any of the other things that the other companies offer. So outside the IRA, it's not very good. But again, IRAs already have that asset protection. So that trust may really work well. What's up? You got a question, Haley?
I have two questions actually. So one of the questions is, so if I don't use the qualified person and have myself as the manager of my LLC, can I purchase a real estate investment and sell it and just take out the income and leave the principal without any penalties?
No. You have, but in that description there, You have literally taken a hand grenade and thrown it inside of all your retirement accounts and blown them up. Okay. No, you can't be the managing member of the LLC. No, you can't get a benefit either directly or indirectly. Taking money is definitely receiving a benefit. No, you cannot extend your services. Got to pay attention to the rules if you want to play in the IRA game, because if you don't, it's painful. How painful? Give you an example. I know a fella who bought $100,000 rental property. He had a $1 million IRA. They deemed that he did a blatantly prohibited transaction. They hit him with prohibited transaction fines and fees. Of course, they found out this a few years later, and the total amount of the fines were 157%. Did you hear me? Guess what? Didn't even hit the scary part yet, because it wasn't 157% of the $100,000 investment. It affects the entire IRA. It was 157% of the $1 million IRA. In other words, he had a $1.5 million tax bill due. Oh, sadly, it gets worse. The person he did the prohibited transaction with was his daughter. His daughter, 30% of those, 30% of that transaction was a fee to his daughter. So instead of helping his daughter out, which was the prohibited transaction he was trying to do, he saddled her with a $300,000 tax bill as she started her life. So please pay attention. Don't break the rules. Mm-hmm. What was the next question? I'm sorry, that was a very punitive answer. It's kind of a little bit of smart, exactly, but I'm glad you asked it, honestly, because that shows the importance of having a good relationship with an IRA specialist so that you are paying attention to the rules.
Mm-hmm, definitely. And I know sometimes we don't like to get into the doom and gloom type of stuff, but it is good to know. But this is another good question, probably a similar answer, but it's a little bit different. Could we have a doing business as, like a DBA, in our IRA without an LLC and get a bank account in the name of this entity?
Who would be on the bank account? The problem with it goes back to the DBA. The DBA is going to insist that who is the beneficial owner. It's not you. It's the IRA or Quest. So because of a DBA is just, again, a pass-through type entity, you couldn't form a DBA, because all they would tell you is who would be the signers would be officers at Quest. It wouldn't help you any. You understand? You would still just have to have everything signed by Quest, and Quest would still have to do anything. So that's the reason there, not because of a rule at Quest, but because of the rules associated with DBAs. Mm-hmm. Anything else?
Yeah, we have one more, not exactly related to this slide.
That's all right, throw it out there.
Since you love HSA so much, one of our attendees wants to know, I have a good sizable HSA account balance. Can I use it for the real estate purchase?
Yes, absolutely. Do it all the time, and you can partner with the other ones. Matter of fact, I think that learning to invest with your HSA is probably one of the new best wealth building tools you ever have. And if you really want to do it well, I'll talk at the end about how to buy debt leveraged real estate with your IRA, or using someone else's money to buy it inside your IRA, which is my favorite investment of all times. So yes, you can do that. And I'm glad you asked that question as well.
Awesome. That's all I've got for now.
Feel free to interrupt anytime, Kelly. All right. So thank you very much for those questions. I'm sorry if I picked on the first guy a little bit much, but it was a really good question. There's another solution here. Remember, I mentioned it, the use of a solo 401k. Solo 401ks are different than any other types of accounts. They got some cool parts of it. And if you were using a solo 401k instead of one of these other transactions, you are absolutely free to be you can sign the documents, you can have checkbook control, you can form an LLC, you can form a trust where you're the managing member. That would be absolutely okay. How do I handle repairs? What do I do? Houses need fixing up, fixer-uppers, right? Well, important to understand is it's about the money. You get to pick your contractors, you get to do all of the work or the head work, but you can't go out there and swing the hammer, right? So different ways that you could do it. Some people, are buying a property and they want to go down and buy a bucket of paint and go get this and go get that. Well, it might be hard to get each little check from Quest if you're directly owning it inside an IRA and not owning it through an LLC or something like that. In that case, just assign yourself a general contractor or a property manager. Then you have to be professional. It could be your brother or friend or something like that, and have someone hold an account for you that would hold it. But the use of a general contractor, so we're writing one check and then the check, or a property manager, one check to them, and they use a lot of it. A lot of people have found that submitting invoices through our client portal actually is very efficient. It's real time. It processes all of these things, and it's very easy to pay people out. So I found some people don't even need the contractor or property manager with some of our new electronic systems. It's just pretty easy to use, depending on what you're doing, of course. Thanks. Also, you could use, like I said, I've kind of mentioned this, just use someone else, just somebody that's not a disqualified person to the IRA. If you ever find that you had to do an emergency repairs and had to run out there, it was Sunday afternoon and you had to spend some money or something like that, never call your IRA custodian up and say, hey, I did these repairs, right? I need to be reimbursed. What you would say is, my sister had to run out there and do these repairs, and now I have to reimburse her. Here's an invoice for that. Something along those lines. Just letting you know. Never telling yourself. Can you do your repairs yourself? No. It seems that when you go out there and swing that hammer, they've definitely deemed that as extending a service. So when you do have repairs, always try to hire someone and properly pay them from the IRA. None of that money should come from your pocket. This one happens a lot. You guys ever buy a piece of real estate and do a rehab and go over? If you haven't, then you probably haven't bought a piece of real estate and done a rehab, is what I would say. Because you go over all the time. And most of the time, it's not a problem. Reach into the pocket, pull out the Home Depot card, go buy whatever I need to finish it up, and pay it off when I sell the property or whatever. The problem is IRAs have limited funds. And what happens if we go over an IRA? We can't take money out of our own pocket and put into it. And it creates a problem. I hear this quite often. What do you do first? The very first thing you do, and I don't care whether you're a Quest client or a client with a different company, pick up the phone and talk to a Quest IRA specialist. They might be able to, they have knowledge running around in their head that I don't have time to go over in a presentation on ways to solve this. Sometimes we can find accounts that you have that we can transfer or make another contribution to it or something like that, do a transfer or rollover, and they just might have information to help you out of that situation. Again, often we can find that you can make a contribution. I had one last week where the guy was like, I'm $12,000 over. What do I do? I said, I can make a contribution, but the contribution limit is only $6,000. And I said, oops, don't worry, because this time of year, you can make a contribution for last year and you can make a contribution for this year or make both contributions in there, right? But a great source is to just borrow the money in this situation. Borrow money from a non-recourse lender. In other words, it can't be a normal lender. You need to have a specialized lender to loan money on it. Matter of fact, tonight we have an expert coming in. One of my favorite people, Matt, he is coming in from a bank called North American Savings Bank. Check it out, NASB.com, North American Savings Bank. It's a bank that specializes in lending to IRAs, all right? And by non-recourse, that means that when they give the loan, they can take the house back in the event of default, but they can't take any other assets or there's no personal guarantee on it. So most lenders won't do a non-recourse loan. But North American Savings Banks loves to lend to IRAs. They've been doing it for years, and we'll talk about it there. But whatever you do, if you run into this situation, do not use your own money. All right. Hey, I'm a realtor. Can I list the property myself? Well, possibly. A lot of people would say, no, you can't do that. That's a service. But I have an argument against that. Remember, You are a fiduciary to your IRA. It's your job to bring all your knowledge and skills to bear to make that IRA bigger and better. So as you do that, you could list the property, but what could you do? You cannot get a commission. For example, my spouse, my wife, is an attorney. She often may do legal work for our IRAs, right? But she cannot charge for that legal work. She cannot receive a commission. It's just some work that she has done for the IRAs. Same if you list the property, you cannot get a commission or receive a benefit directly or indirectly. I think you could also make an argument that you're probably performing a service in that case, but I'm just going off of history, not just the legal argument itself. I've never seen that. I've never seen them go after that. Certainly I've seen people go after people doing repairs. Most of the time when they're doing that, it's a builder, who's bringing his whole companies in and doing that. It's not because you wouldn't change the stopper whenever the sink stopped up or something like that. But again, I'm just speaking to that. Could I be my property manager? I would say yes. Going back to, you have to be a good fiduciary. So you can do all of the duties that a property manager does. Find contractors, find a good tenant, find deals on things, but you can't touch the money. Have to have that separation from you and the checkbook, with the exception of that solo 401k in there. If you have any questions, you can interrupt me if you want to, Haley. All right. I'm getting into one of the most sticky situations that I love to talk about, or one of the biggest problems, right? And is, can your IRA be taxable? Yes. There are times that investments inside the IRA create a tax. It's not a tax to you personally. It's a tax to your IRA. Your IRA has to fill out its own income tax form, right? And this is under something called unrelated business income tax. Let me see if I can explain it to you, okay? If your IRA owned a business, let's say you're making ice cream, right? Now, if I'm selling ice cream and my ice cream company was owned by a Roth IRA and I didn't have to pay any income tax on that money that it made, couldn't I sell my ice cream cheaper? Right? It would be an unfair business advantage. So what would happen is, can an IRA own a functioning business? Yes. It's not prohibited. It's taxable. In other words, we'd have to pay tax on that income, and then the dividends remit tax rate. And then always have someone ask, and says, but wait a second, I buy businesses all the time in my IRA. I have Coca-Cola stock, whatever it is, right? I got stock in Apple. That's true. You do. But you also pay tax on it because those are corporations. The corporations pay tax at a corporate level, and then the dividends remove tax-free. Nathan, we're talking about real estate, not owning a business. Why would this affect us? In this case, this side of the law doesn't affect us and owning real estate. It does get us into one other area, renting personal property. So if you have a mobile home, not a piece of land with a mobile home sitting on it, just the box, right? That's personal property. If we rent, buy, or sell mobile homes, storage containers, sometimes office equipment, sometimes people rent like tractor trailers and things like that. All of those things are taxable under unrelated business income tax. Where do you find a good tax attorney that understands unrelated business income tax? Well, deal with the people that deal with nonprofits. Churches and stuff often may file unrelated business income tax. They own a business. It's okay to own a business. It's just taxable under those things. It's not exempt under their non-exempt status. So again, Nathan, we're buying real estate. I don't know why you're talking about it, because there's another side to this. It's unrelated debt income. This affects debt financed financial gains and debt capital gains. Let me tell you a little story so you can understand it. We want to go buy a house, right? The house costs $100,000. And I don't have $100,000. I have $40,000 in my IRA. So instead, what I do is I put $40,000 down I contact North American Savings Bank, talk to Matt, say, Matt, give me the other 60. He does. Now we've purchased the house for $100,000 using $40,000 down, $60,000 from Matt, and I'm 60% debt leverage. Good news in my story. I sell the property for $200,000, making $100,000 in profit, right? In one day. Woohoo! Except bad news. That is subject to tax. Well, how much tax? Well, the 40% or the $40,000, we get that, no tax on it. All right. But the $60,000, the rest of that $100,000 in gain is subject to tax. If we had held it over a year, we could get capital gains rate. But since we only held it for one day, we have to pay it ordinary income at a trust rate. Trust rates are really high. They hit the top percentage, somewhere around $12,000. So basically, you're going to lose $25,000, $27,000 of that $60,000 to the IRS. I mean, would you do that deal? And a lot of you are doing this, shaking your head. And I'd be like, wake up and smell the coffee. Pay attention to what I just said. You started with $40,000. In one day, you got $40,000 back. You return. Plus, then you got $40,000 in profit. Then you split $60,000 with Uncle Sam. Sign me up. I would do it every day of the week if I could. The problem in the story wasn't the taxes. It's that we don't really buy property for $100,000 and sell it for $200,000 the next day. That's the real problem in the story. All right. So, but I'm just trying to define the problem so we can talk about the solutions, because the solutions are actually really fun. All right. And I'm going to talk about why you would want to do all of this in the end too. Okay. So don't be confused. If you bought a piece of real estate, a rental property or fix, and you paid complete cash on it, there's no taxes. This only is affected when the property is debt leveraged or we bought the property with a loan on it. How am I doing on time? Good. Right. So here's solution one: depreciation. That's right. Wait a second. I get told all the time, Nathan, I would never, ever, ever buy real estate in an IRA, because you lose one of the most powerful tools that you get in investment property, which is the use of depreciation. And it's usually a really smart guy that's telling me this, a tax professional or something else, and I got to scratch my head because I may not be as educated as to some of those things, right? But I have to stop and ask someone. I'm saying, really, that's interesting, because the problem I have is I got this big old pile of money. And it's not whether the pile of money is inside my IRA or outside the IRA. I'm not making that as a decision. It's already in the IRA. I've got to make a decision as to what to do with it. And if I buy real estate with it, I'm pretty good at this. I can buy low and sell high, and cash flow, and get appreciation in there. And so over a period of years, I'd have a big old bucket of money when I'm retired. But if I was investing in other things, like CDs and stocks, I don't know that much about it, so I'd be pretty conservative. I wouldn't get very much gain, and I'd have a little bucket of money. Mr. Smart Dude, isn't a big bucket of money better than a little bucket of money? Literally, they've overanalyzed so much that they can't see the end result through the trees. But why is it that IRAs don't get the use of depreciation? It's really simple. There's no tax. There's nothing to depreciate because you don't pay any tax if I buy and sell real estate in an IRA for cash. There's no tax. But as soon as we get taxation, then we get to use these tax laws like depreciation. But in an IRA, it's magic. It's totally different than if I do it outside the IRA. Let me explain. Remember one key point. You're only taxed on your debt leverage percentage. So go back to my story. I bought the house. I put $40,000 down. I borrowed $60,000 from North American Savings Bank. Boom, I'm ready to go. But instead of selling it, I keep the property and I rent it for a long period of time. Well, what happens is those gains that I'm getting, they could be taxable, but what I could do is use depreciation. Depreciation doesn't make tax go away. What does it do? It pushes the tax off to the future. When you sell that property, you have to recapture it. Thus the 1031 exchange, right? But inside an IRA, what we could do is we could push that taxation off to the future while we're paying the property off. If we can get to what's called an average indebtedness of 0, in other words, we paid the property off for a year prior to selling it, how much tax do we owe? That's correct, 0. So unlike outside the IRA where we're just pitching and we'll have to recapture it someday in the future, we could literally use depreciation to just make the tax go away. All right. Now, again, it depends on what your real estate strategy is. If I'm buying the property, using the loan, hopefully eventually getting it paid off, that works great, right? But the other side of it is, let's say I'm doing an apartment complex, and I'm buying it and I got debt on it. Well, often what I'm doing is I improve that apartment complex and make it worth more, and I borrow more money. In other words, I'm not on commercial properties. I'm very seldom paying that property off. So not every solution works for everything. Or if I'm doing a flip, right, it's not going to work in that way. So it just depends on what your strategy are, but depreciation is one of the solutions. Another solution that in today's strategy doesn't work as well because of the corporate rates are flat, but that I have used this is where you form a corporation, and just like Coca-Cola and those, the tax is paid at the corporate level. Pay attention to this if you're syndicating funds. Let's say I'm buying an apartment complex, commercial property. I'm getting qualified investors to invest into my transaction. Some of them are using their IRA. What you could do is set up a small C corporation on the side. The taxes are paid to the C corporation, then the dividends remit to the IRAs tax-free. You don't want to put your individuals into that C corporation. They'll directly buy into the LLC. The C corporation will buy into the LLC. What does that do? Well, instead of filing a bunch of tax returns for all the different IRAs and shifting that responsibility to your individual investors, you've now set up structure so that you're filing a corporate tax return, one, right? And then the dividends remit through. It's less hassle for the people that are investing into your apartment complex. And I've seen people very successful at raising money using this strategy, because there are people out there that have IRA money that do like apartment complexing, but they just don't want to fill out a 990T and mess with that. And so if they can find an apartment complex that or a person that's using the strategy, they'll use it. Something to think about. All right. But here's my magic bullet: a solo 401k. That is correct. A solo 401k is a special type of account that not only allows for checkbook control, but has a specific exemption for debt leveraged real estate held in the IRA. If you do this investment inside of a 401k and there is a 1-year hold time. You can't do the flip part, but if you hold it for more than 1 year, there's just no tax. It just poof, it goes out the window. And this includes apartment complex. And I've seen people use this. In other words, I've invested into an apartment complex. It hasn't realized much profit yet, but it's going to. It's going to be a good one. I can tell. We've had it for a couple of years. Oh my gosh, I just heard that I did this through my IRA, and now they didn't tell me about it, those dirty boogers, but I could be subject to unrelated business income tax. What do I do? If you qualified, you could move that account into a solo 401k. And if you did that, as you realize those gains, you wouldn't have to pay those tax. You're like, boom, Nathan, why didn't you just start with the solo 401k? It's the coolest. It's the magic bullet. Why do we need to hear about all the other stuff? Because the solo 401k has its own set of problems, right? The biggest problem is what I call legitimizing. You can't just have a solo 401k because you want one. You have to qualify for it. Well, how do you have to qualify for it? You have to have actual self-employment income that you turn in on your tax return, commissions, anything else that you have as income, right? Now, that income, like, for example, I'm a W-2 employee at Quest. If I had Nathan's haircutting service, Nathan's consulting service, Nathan's lawn mowing service, and had income on the side, I could have a 401k at work and a 401k for my solo. I could make a small contribution. That would legitimize that 401k. You have to make a contribution in the first year that you have it for sure, right? Then I can move my other IRAs into it and pick up that exemption from there, right? But there are other problems that also exist with solo 401ks. The biggest one is the reporting requirements, all right? With an IRA, Quest is doing all the reporting. When you have a solo 401k, you have to do your own reporting. You have a lot of responsibility as it comes with prohibited transactions, and the record keeping is all your responsibility. And that can be very, very tricky. At Quest, when someone wants a solo 401k, we insist that you do a consultation with one of our IRA specialists to make sure that you understand all your responsibilities as you do one. We do a lot to try to educate you as having it. Other problems is, could I really have solo 401k if I had Nate's haircutting service? The answer is actually no. The reason is because on top of being an employee of Quest, I'm one of the owners. As an owner of Quest, one of the majority shareholders as Quest, that means I have common law employees. And so if you have common law employees in this business or any other business, you're no longer eligible for a solo 401k. You have to have your 401k benefits at times Quincy has owned other companies other than Quest. And when we have our 401k or we have our health benefits, those have to extend to the other companies that we own. That's the reason for that. So again, solo 401k is a great solution to this problem, but can come with its own problem. But they have tons of advantages, solo 401ks, including checkbook control. You can make large contributions. You can loan money even to yourself in certain circumstances. But one of the big advantages is that exemption on that unrelated debt finance tax that does occur. There's other problems, like, for example, you can't move a Roth IRA into a Roth solo 401k. There is some talk about changing that legislation, but that hasn't been changed as of yet. It's kind of like a mistake in there. We can convert inside of a solo 401k. We can move a traditional IRA in there and then convert it to a Roth. And you can make the contributions you make can be made as a Roth contribution. But oddly enough, you can't, at this point, move a Roth IRA into it. Great class about solo 401ks there that just popped up at the bottom of the screen that we can get you in on how to do that. But a lot of you right now are listening to me and going, Nathan, that sounds like a pain. Why in the world would I go through all of that? Right? I can just invest in the stocks or whatever. Well, I'm going to give you what I think is the best answer, and that is, it's the best. If you look at every investment class all over the world, there's one class that year after year has always beaten every investment there is. Every year. And that's not just solo, that's globally. What is it? Single family rental properties. Man, and then double down by buying single family rental properties with someone else's money. Sign me up. Highest profit margin. Why? Well, there's two reasons, really. And to be fair, real estate is time consuming. I personally don't own a lot of personal real estate. I like loans over real estate just because of the toilets and tenants. So it does take time in there. You have to be good at it. You have to find good deals on the properties. You have to find good tenants. You have to be able to make good repairs and keep them maintenance and all those things like that. But you get to play both ends of the thing. You're not only buying and selling, trying to buy low and sell high, right? And we get that. We get appreciation in there. Real estate typically has always done well over time, going up in value, but you get the cash flow. Cash flow is king. I remember my parents. My parents were real estate investors here in Houston, Texas, in the early 80s. Had a title company and some other things. What happened here in Houston is the oil business everything fell out. And all of a sudden, houses that you'd pay $100,000 for, you could buy for 50. I'm talking nice houses, 3-bedroom, 2-bath, nice area of town, suburb type area, 3-bedroom, 2-bath, 1 or 2-year-old house, 50 grand instead of, and they were 100, 110 before that. They said, this is a buying opportunity. My parents went in and bought as many as they could. When they ran out of money, they started debt leveraging. They bought more. They borrowed money against property and bought as many as they could, put renters in them, and were cash flowing well. About a year and a half later, the second hit. Some of you that are my age and older remember this, right? That's when it really got bad. Those same houses all of a sudden were selling up and down the block for 25 grand, not 50. They bought at 50. Now all their assets were worth 25. Right? Do that investment and anything else, you're broke, especially if you double down and debt leveraged like my parents did. What happened? They got rich. How? Because they were cash flowing the properties. And this time, a lot of the houses were rents were actually going up because, everybody was losing their house in Houston. True story. I mean, even if you had a house, why would you keep it $100,000, buy the house next door for 25? Same house, right? You wouldn't keep making the payments. People just stopped making payments on them. And so rents were fine. They planned on cash flowing property, and they just held on to the properties long enough. And eventually they got to be back up to worth the $50,000. This did not happen overnight. It took years. And eventually they got to be worth up over the 100,000. And, they slowly sold them off as they gained gain. But again, you make that same mistake in some other business, it'd kill you. That's why you buy real estate using someone else's money, making all the sense in the world. Even if it creates you to have to deal with some of these little tax problems, you can do it. And then fine. How to get more education, because you need it, right? Call us, talk to us. Quest Trust Company, YouTube, Quest Trust Company, Facebook. We have tons of education and it's free. But one of the best things about picking up the phone and actually talking to an IRA specialist is you get to know one. So when you really do have a problem, you can call and feel comfortable, right? And again, they're not selling you anything. They're complete neutral parties, highly educated. It takes years for me to train an IRA specialist at Quest. So take advantage of all that money I spent on teaching them. And one of my favorite people, real salt of the earth, real guy, been doing this a long time, is coming tonight, Matt Allen. He's from North American Savings Bank. They phenomenal about using debt to buy real estate. They make the process very, very easy. And I've been working with them for years and years on doing this. And I could wholeheartedly give them a thumbs up. They've just got great customer service and know their business really, really well. And the information that Matt will go over tonight will astound you. If either watch it live so you can catch and ask the questions is best, but if you can't, catch up with it, and it'll be recorded and do it from there. But probably one of the best strategies you could do inside an IRA, and here's one of the best experts on how to do it. Also, you can always email us at iraspecialist.com. I think I'm done, Haley.
Yes.
There she is. It's like magic. You just appear.
Yeah, we do have one more question. This is a good one. So for a single family rental, let's see. Let me move this back over. For a single family rental, if I have one in my IRA and I'm collecting rent, how can I use the profit or excess cash flow coming in from the rent for personal use?
You can't. That goes back to the disqualified persons thing. Your IRA is designed to force you to use it for your future. The only way you can get it is to take that money out as it comes in. Now, I do have clients that do that, right? They're above the age of 59 and a half. They have their IRA, right? They have a rental property in it, but they want to live off that money. They want to play golf off of it, whatever it is they want to do. That's no problem. What happens is they pay the rent check to the IRA, and we have automatic distribution. So after it comes in there, boom, it just distributes out to them. So you can remove it from the IRA and spend it that way, but that's the only way. And if you're below the age of 59 and a half, in most cases, you are subject to a 10% penalty as well. There are exceptions. There's uses of like the health savings account. There's all types of times that you can remove those. Use Coverdell. Sorry, but not COVID, just talking a lot. But that's a great question. I mean, honestly, that's what everyone's thinking about, but you just got to think about it differently. And I always advise this. All right. If you're not at that 59 and a half and you want to create that income, how do you do it? Well, you got to multiply out your thinking. You use your IRA, you invest it for your future. Then you borrow other people's IRAs, use them like the bank, so that you have real estate that you're owning right now. And that's what you eat off of. That's what you create the income from. And this will give you a very well-balanced wealth building strategy. Haley, you grew up in this business, and this is one of the things you do, right? You have investments outside, investments in, and then you leverage and play all those different games. It always scares me because Haley really doesn't need to work at Quest. So,
But here I am.
She does it because she enjoys it. Other types of things. She's very, very talented, and one of the people that gets lots of job offers. She tells them no all the time. I don't know why, but she does. So just don't bother. She's taken.
Awesome. So great answer there. We do have one more question, at least for right now. And it's kind of a good segue from the other one. Can I invest into a real estate transaction as an individual that I also invest my self-directed IRA into?
Yes, but okay. So that's like partnering disqualified persons. It's kind of like that example that I gave up there of all the different IRAs, and I put them all there. Those are actually disqualified persons to each other. They can't buy, sell, trade, or extend services or receive a benefit directly or indirectly. But if you partner together, as long as you can set it up so that all the expenses that occur are directly correlated with your percentage of ownership. You own 40% yourself, 60% your IRA, you pay 40% of the repairs, the IRA pays 60. As money comes in, the IRA gets 60, you get 40. You can't do disproportionate distributions, right? Has to be equal to that. And then what I found, I've actually done that myself, and I don't do it anymore, mostly just because it's difficult. Like if you're doing a loan, then the lender has to write one check to Quest, one check to you. Things like that just created some complexity. And as my IRA got bigger, I just didn't need to do that. So I stopped. But yeah, you could, if it's certainly not going to be stopped at IRA. I guess if you had a legal consideration that you would concern is if you want to really get thinking about it a lot, you might think that you want to make sure that you're not accidentally providing services to your IRA. In other words, you can make the argument that the IRA could have done the investment anyway, but you just allowed it to partner with you.
Mm-hmm. Yes. And I will just kind of add to this one, whenever you are partnering your own funds with your IRA, please meet with an IRA specialist. Ask us questions whenever you have them. It's definitely probably not something we recommend for someone to do with their very first IRA investment, just because you're still kind of learning the rules at that point. But reach out to us. We're definitely happy to help answer questions if it's allowed.
I know we say that a lot, but people just don't understand that I have people that have been my clients for years. And then they said they finally did a consultation with an IRA specialist, and they're going, my God, why didn't I do that years ago? I'm like, I don't know why. I've been saying it. Yes, you should have done it. It's free. We're trying to help you get. They're like, man, they brought so much stuff to the table. If I had only known that back then. How many times do you hear that, Nate? Honestly, Haley?
All the time.
So take the time. It's free. And it doesn't mean that you can talk to an IRA specialist. Maybe you're just trying to raise money. In other words, you're on the other side of the fence. It's still great to understand the rules, know what's going on, and have an IRA specialist in your pocket.
Mm-hmm. Yes, definitely. So I think that's actually all of the questions that we have, since I know we answered some in the middle of the presentation as well. Guys, just to kind of like wrap it up here, Be sure to get your tickets to QuestCon. Be sure to check out Matt Allen tonight here at 6:30 p.m. I just sent the links just one more time here in the chat. Nathan, before we sign off for the day, do you have any last kind of closing thoughts that you'd like to?
Yeah, I think I do. I want to brag about you for a minute. Not just you, but all the people at Quest. I would ask you this. What is it you did in 2020 or 2019 that allowed you to get through 2020? What did you do to set yourself up? How well did you fare? For Quest, it was a hard year. You know how we get new business is we have these events and everyone comes. We're a neutral party. So what happens is people who need money come and people who have money come and they find each other and they do deals. We get paid transaction fees as they do deals. Everything changed. We're no longer allowed to do events. Interest rate non-existent. People can't buy property at auctions anymore. So the amount of transactions are going down because it's hard to find investments. All types of things that occur that should affect Quest, right? And affect our income and affected it in dramatic ways. And we've since Quest inception, we've always put money back into Quest all the time and growing. What do we do? How do we survive? Well, this is what we did. Because I think what defines you as a person isn't what happens whenever you're being good. What defines you as a person is how you act in times of difficulty. And the same thing is about a company. This was a difficult time. What do we do? Well, we started by realizing that our employees needed space. So we immediately, within days, had a work from home program, and 60% of our staff was working from home almost right off the bat. We got equipment. We had people set things up. We paid for extra. We had to buy chairs and things like that just so people had workspaces at home, right? Next thing that we immediately did is we told them that we would pay for all COVID, whether insurance covered it or not. Any testing, anything, part-time people, any not on our insurance program, you have to go get a COVID test. Boom, we'll take care of it. Next thing that we did is we gave every employee 5 extra personal days. These were just sick days that they could use at any time that they needed to help deal with family emergencies and all the things that were coming up. Next thing we did, created a Quest stimulus. All of our employees that make less than $100,000 got a stimulus check from Quest, not from the government, right? To help with all these things and all these problems. How did we do all that? It's because I chose the right people to do business with prior. When I hire someone at Quest, what I'm looking for is someone with a good moral compass, someone that wants to work hard and someone that wants to learn. Give me those things and I can fill in the education and the rest through the system. And what did we do? We just went to our employees and said, we're an open book company. So all our financials, all the employees can see. There's no mystery. They said, this is where we're at. What do we do? What did they do? Honestly, Haley, I don't know what the heck you guys did, but you did it all real well. You put on a bunch of virtual events, right? We reached out to people. They cut expenses, and we even had to get more office space just to spread people out. And we bought air filters, all types of other expenses that occurred through this. And the whole time, honestly, we made money in 2020 when we shouldn't have. We did. We hit all of our goals. We're highly regulated, so it's really important that we hit these goals. Otherwise, the Texas Banking Commission comes in and does things to us. They're really ugly, And so I would ask you this. If you want to take the time to do something that's important right now for your future, pay attention to who you're surrounding yourself with and who you're doing business with. If it's not a company that's going to be there during the tough times, to be there for their clients and their employees, right? What did they do last year? Maybe it's the wrong business, but surround yourself with businesses like Quest, like Matt Allen's North American Savings Bank. That's a good company too. And like a lot of the other companies that we bring on here. Anyway, that's my poop. I said it. I know I went way over on it and just rambled on. But I am very proud of you, Haley Gant, as well as the rest of my staff, for your performance over the last year. Has been phenomenal.
And, we couldn't have done it without you and Quincy and all of the executives, disaster recovery team. It was a wild transition. I remember that last day at the office, I actually stole my desk chair before you guys bought them. I was like, I need this. Walked out with my desk chair, my plant, and never looked back. But yeah, guys, Quest is a great company to work for. Reach out to us, build relationships with us. A lot of us are investors ourselves. Nathan, that was so sweet. So I appreciate that. I get to appreciate every time you speak, basically. But guys, be sure to check out our other events, check out our YouTube, check out our IRA specialist. We are always here to help. I hope you'll have a great day, and I will see you later tonight at 6:30 p.m. Central Time.
See you then, Haley. Bye-bye.
Bye, Nathan.